How are you reading into what's happening with the yuan right now? And are you surprised by how quickly it's gone down?
Yeah, I think by and large, I think the yuan will be stabilizing stabilizing at the current level. This is because if you look at the past, it's a major fundamental of the yuan is about the export of China and the current account surplus. Mm-hmm. So obviously, the export having some challenging environment for China in general with the weakened Western world demand. But having said that, I think in general, we believe that export is still resilient. If you look at the drill down to the exports, I think in some areas they still have a structural growth. For instance, the export to the ASEAN countries, the export of certain items, say autos being particularly strong, driven by the EVs, etc. So our point is that we still see a rather resilient current account surplus and export, and then the FDI for now is still quite resilient in general. Mm-hmm. Obviously, there are some interest rate differences with the other major developed countries, but we still hold the view that China economy will have a reasonable rebound this year amid a slowdown. So,
is this an orchestrated move? Do you think this is something that the authorities are comfortable with the depreciation in the yuan coming on the back of how swift and fast the move has been?
Yeah, I think that largely it will still be stable. That's our major base case. I think that we possibly see some recovery of the yuan, especially in the second half, if the economy picking up some momentum again. But generally, I think the policy...
the authorities want a weaker yuan right now?
I do not think so. I think that's the policymaker do not see currency as a stimulus tool to boost the economy. And then for RMB international, for a longer term, it's better to have a more stable currency ahead.
Can I just ask you, because you mentioned FDI, and the last figure I saw was roughly at around about 2% growth over the course of the period to this year. But I wanted to ask you, if we don't necessarily see, because a lot of expectations are centered on in the second half you're going to see that strength, but if you don't see that consumption strength coming through for the summer months in China, all the leading indicators, if you're looking at commodity pricing and the like, are suggesting that it just isn't there. But so hypothetically speaking, if we don't see all of that positivity, do you think that the markets can retain an even keel like we're seeing now? Or could there be further pain to come in that kind of a scenario? Because even if we're talking about the FDI issue, for example, there's a lot of suggestions that the US is going to be seeking to curb further investment in China. So what happens in that scenario? How do investors look at it from that lens?
Yeah, sure. So first of all, on the consumptions, we still hold the view that the full year we have some recovery. Just right now, the consumers' confidence is just recovering gradually, right? So this is still coming for the full year's recovery. But if in the case that you mentioned, it's not really coming through, I think there's policy still have a lot of room to stimulate the economy. That's not about currency itself, but it's about other things, more monetary. For instance, we do think that possibly we'll have more triple cut or policy rate cut in the coming months. And on the fiscal side, there's also possible that I think that government will do something, arrangement on the local government special bond issuance, for instance, to alleviate their financial stress there.